Cool. Awesome. This is the first time I'm using Bevy, so there's a bit of like learning curve as we go. So hello everyone, thank you for being here. My name is Wala Hamdan and I'm the director for Startup Grind in Muscat. Startup Grind Muscat is a member of the largest independent startup community in the world. Globally, we activate, inspire, and connect 3.5 million founders in over 600 cities. And locally, this is, I think, event number 26 or 27, where we expose Omani entrepreneurs to successful tech entrepreneurs around the region and now globally through our virtual events. And I'd like to thank our partners before we get started, Reality CG as our local partner, and SAS Center for Entrepreneurship, our community partners. And also I'd like to thank Hasan. Thank you for joining us, Hasan. And just to introduce you briefly to everyone, Hasan has over 10 years of experience investing in MENA startups. He is the founder and managing partner of Plus VC, an early-stage venture capital firm focused on the MENA region. Previously, and this is the career change that I was talking about, Hasan was managing partner MENA at 500 startups and led the firm's growth in the region over the last 5 years, turning 500 startups into the most active VC fund in MENA. And Hasan has invested in more than 180 startups in the region over the course of the last 10 years. So if I may start, Hasan, with such an impressive profile, we'd love to learn about your journey and how you reached where you are today. Could you tell us about your journey briefly?
Yeah, sure. It was an accident, I guess. That's really the top line. I never thought that, oh, I'm gonna graduate from university and I'm gonna go and be a VC. Like that wasn't really the career I thought I was gonna have. I graduated with a degree in economics and I thought I was just gonna be in investment banking or some sort of asset management or something like that. I worked in wealth management for a bit after graduating in London, and that was not for me. After a few months, I was like, okay, this is not what I thought it was going to be. Moved back to Bahrain, worked in asset management for a while at Seco, so I was buying and selling stocks on the Gulf markets. That was pretty good. It was a great learning experience, very nice team and everything. But again, it just didn't feel like I was adding any real value to anything, really. I was just buying shares, moving numbers from one Excel sheet to another. And then I ended up, I thought, hey, let me do something for myself. And so I ended up doing my own startup. It was a DVD delivery sort of business where we would deliver DVDs to people's houses. So it was before Netflix had streaming and everything. I did okay for a while, but honestly, I had no idea what I was doing, and I screwed up like big time because I just didn't have the right guidance, mentorship, advice. Like I was just flying blind really at that point. And then so felt like I needed to do something for myself, did something I'm passionate about, which is like movies and films. I love watching TV and movies a lot. And then from there, it was like, oh, well, there's a gap in funding. Like, in the US, there's these angel investors, there's VCs. And at the time in 2009, 8, 9, in the region, there just was nothing. And so in my across one of the families in Bahrain, and Sami Jalal, who was sort of there, he said, well, let's do that. Let's set up an angel investment group for Bahraini founders to get started. And so we did that. We launched Tenmu, one of the first angel investment groups in the region. InfoDev uses it as a case study, which is pretty cool, as a World Bank sort of organization using it. But then again, that solved a certain gap in idea stage funding in Bahrain. But at the time when we launched this in 2010, 11, there still wasn't that much in terms of funding available across the MENA region. So I was getting access to deals from all over the region. Like we were one of only a handful of organizations that were investing equity of any sort. And so then, popped in my head, like, why don't I take advantage of all this deal flow? And then started working on setting up a VC fund to sort of fill in that next gap. And then ended up meeting up with the founder of 500 Startups, Dave McClure, and then he basically said, "Hey, why don't we join forces and do something in the region?" And the rest is history. Launched 500's operations here, and then 500 was looking at having a bit of a change in strategy across the region. And we're like, well, let's continue doing what we're doing, and let's launch Plus VC. And so that's how it happened. Very weird and not a straightforward line.
Serendipitous.
Yeah.
A lot of serendipity, which is, I think, how things come together when they're supposed to happen the way that they're supposed to happen, right? Awesome.
I guess this is what I'm meant to be doing. I had no idea it would be.
So were 500 startups already in the region? Were they thinking of coming here when you met them?
So at the time, 500 had done maybe a couple of investments in Jordan, a few deals there, but had no real, had no real operations on the ground or anything, and there was a lot more activity happening at that time. And so, what ended up happening is I joined the global fund, the global team, was investing out of that for a little while, but then in 2017 we launched the fund that's focused on the Middle East, and since then we've just been super active.
Awesome. And could you, so you mentioned kind of being in your role, and you just thought, I wanted to do something on my own. Could you tell me what that spark was where you decided, you know what, I want to do something? Was it a specific moment? Was it something that happened?
No, I don't think there was any a trigger that, oh my God, I have to do something for myself. It was more like, hey, there's this thing I was using in the UK. Why isn't it here? My life is so complicated because I have to go to the DVD store. And I guess it was born out of laziness more than anything else. I wanted things to be more comfortable and convenient for me. And so I was like, well, why doesn't someone do that? And then I was like, well, why don't I do that? And that looks easy. Why not? It is not easy to start a startup.
It looks easier.
It's like, oh yeah, super easy. I just get movies and a website and that's it. No, that was not the case.
So then what was your biggest lesson that still sticks with you today from that?
I guess there's a bunch of things that I learned. One is be very cautious with cash flows. Make sure that whatever you're spending, you know exactly what the return is going to be based on that expense. I think there was a lot of things that I was spending on that really I shouldn't have been doing at that point in time. So cash flow management and just sort of like measuring ROI on expenses and stuff was pretty important. I think that's the biggest one. And then, learned a lot of things about managing teams and working with partners and all of that. So that I did all the wrong things on that angle so that I learned how to do it better in the next phases of my life. Yeah.
I think the first startup is always where you pick up all the things you shouldn't be doing.
Yeah.
So you eventually figure out everything you should be doing.
That's exactly what happened.
Yeah, I relate to that as well. So on that note, do you have advice for early stage startups? And I'm sure you get this question a lot, but I'm curious to hear what you have to say.
Yeah, I mean, there's a lot of advice that I can give, but honestly, the advice that I find myself giving out most is, if you're a startup that just has an idea, it's not really worth anything, right? Like what you need to be doing, what's of value is building something. So like your focus as a startup should always be towards execution. You should always be trying to build, launch, do something, grow. Like that is the important thing, not fundraising, not is this a great idea? Like ideas are worthless. It's just about, can you really build and execute and grow something? And that focus is the most important thing, I think. There's founders that have a pitch deck and they're like, oh, we're startup founders. No, you're not. You have a PowerPoint presentation. That doesn't mean anything. Like build a product, launch it, get customers, get revenues, then you really have something. So that's probably my biggest advice is build things. Like that's what you're working on as a startup and figure out ways to get things done.
Yeah. And then I was going to ask a question, but it slipped my mind. I don't like when that happens. But I will ask you this. So how did you decide to launch your own VC firm?
Well, it was basically that we wanted to focus our efforts to be a VC firm, like a VC fund, and investing is really what we're doing. Like we want to invest in founders and help them and support them and help them grow. Like that's really the idea. So investment led first. And so, things were changing at 500 and we're like, well, we want to continue doing what we were doing before. And it just sort of made sense. Majority of the team and stuff were just like, yeah, we want to continue building on our efforts before.
Cool.
It was a pretty hard decision and discussion. It wasn't like, oh yeah, let's just do this. No, there was a lot of consideration behind it. So, it is a risky endeavor, but you've got to take risks if you want to build something for the long run, I guess.
So if I may ask, how did you take that leap? What was the moment that you decided, you know what, I wanna take that risk?
So honestly, what I did is I spoke to a bunch of mentors. So a lot of people that I respect or have more experience than me in a lot of matters in life, and took their advice really more than anything else. Like I have my perspective, but I might be too deep in my perspective to be able to see the overall broader picture of what's going on. And so it's always good to have. I spoke to like 3 or 4 of my mentors that I speak to whenever there's like this crossroads in my life, and get their advice and experience based on what they've done. And I think that experience is something you don't get from reading a book or anything. That it's life really that gets you there. And just I needed someone else to sort of tell them what's going on and ask their advice about what it would be that they would do. And once it was unanimous across everyone that I spoke to that, hey, yeah, you should definitely be doing your own thing. I was like, okay, well, I guess I'm going to be doing my own thing. Like that, people who are smarter than me and have more experience and advice than me, then like I'm not gonna say no. They don't know what they're talking about,
Yeah, I guess that's a smart way to de-risk as well, to make sure that people around you aren't saying you're crazy. No, you shouldn't do this. They're all agreeing. So that's a great way to assess. Yeah.
Yeah, but the thing is, like, if normal people were saying that I'm crazy, I was like, yeah, whatever. You don't mean anything to me, right? But it's like, it's these mentors that I respect and have a lot more experience than I do in everything. And if they say that it was crazy, then maybe I would have reconsidered it. Like that's the thing.
No, that definitely makes sense. So, what is your mission in Plus VC?
So our mission is to really invest in and support the best founders from across the MENA region and MENA diaspora at the earliest stages. So not really at idea or pre-seed, but generally at the seed stage. And we sort of want to be the leading firm that any founder comes to once they're like, okay, I'm at the seed stage, I'm at the right stage. I need to get funding from Plus VC because I think they're going to set me on the right path. Like that's the overall objective and mission of what we're trying to do. And honestly, we want to help founders grow and build something real for the region. We, with the previous fund, we did 180 investments in 3 years. We were 25% of all the seed deals in the MENA region over those 3 years. So like significant impact through that. And we want to continue supporting and helping and getting founders to the next stage of their development as much as we can.
Very, very cool. And I can see, I believe that you will get there. You will be contributing to more and more founders across the region. I am sure of it.
Yeah.
What do you mean by founders first? Because across your website, that was very clear that you are founders first and founder friendly VC firm. What do you mean by that?
So honestly, in most situations where we've been involved in a deal and there's been an issue with investors or founders, we try and help the founders navigate that. So we don't really take any specific side, and we're really trying to guide the founders to the best possible result that they can have of any situation that they're in. And that's sort of built into the way that we look at things. We're here to support the founders. We're not here to take over. We don't know everything. We're not the experts in whatever it is that founders building. We're here for whatever they need and whatever help we can provide. Really, that's our mindset as a firm. Some other firms, I mean, not necessarily here in the region, but all over the world, don't necessarily have that mindset where they might get a bit too involved in things, or not really support the founders in sort of areas where they need help or support with. So that's generally our sort of mindset and mentality is how can we really help the founders in their journey rather than take advantage of them.
Makes sense. Makes sense. Absolutely. I have a couple of questions that have come in from the audience that I want to touch on, and I will be touching on questions as soon as I can when you guys send them in. Payam and Awais are both kind of asking similar questions. They're asking about your ticket size, development stage, and what sectors you'd be interested in investing in.
Sure. So we typically are investors at the seed stage. And for us, the seed stage means there's a product launched in the market and you have some customers and revenues. Typically, the revenue target is around $5,000 in monthly revenues. That makes sense that, there's people that are willing to pay you that. And so there must be something there. So that's really the stage that we look at. We don't do ideas. We don't do product. We wait until there's some market indication that there's value in this. In terms of, so seed really is what we invest in. Our target's to do about $200,000 tickets in rounds that are between $500,000 to $1 million. We're happy to lead those rounds and support the founder to get to their target in terms of fundraising through introductions to whatever it is we can do to help. And in terms of sector and industry, we'll invest in anything as long as there's some technology component in it. Okay. There has to be some tech in order for it to be able to scale and grow as a VC level. So purely offline businesses wouldn't really be something that we look at.
Absolutely. That makes sense. And then how do you pick the teams that you invest in? Because I know it's not just about the idea, right?
Yeah, I mean, it's honestly more the team than the idea. So it's about the team showing me their ability to execute and build something. Like that's the most important thing, right? Can you show me you know how to acquire customers? You've already acquired some customers and users. They're paying you. You're generating some revenues, and you've sort of figured out how to acquire those on a regular basis. I mean, of course, it won't be perfect, but at least there'll be some indication there. Yeah. And so, like I said, I'm looking for teams that have a bias towards execution. They're getting shit done, and not just sitting around and hoping things happen to them. So that's really the important thing. It's hard to really quantify in numbers what that means, and I guess I've seen probably 10,000 deals over the last 2 years, probably more. And that it's an experience filter, I guess, that sort of helps filter that out. But honestly, it's just, show me that you can build something that has value and people are willing to pay you or use your product. It's pretty straightforward.
It makes sense. And I'm sorry, my cats have figured out how to get into the room. So that's why I keep muting myself.
No worries.
They open the door. But I will also go back to a question from Shoaib. He's specifically asking about e-commerce companies. Have you invested in e-commerce before? And if you haven't or have, what is it that you look for with e-commerce companies?
Done maybe 30 or 40 investments in e-commerce companies, so quite a few. And so what it is that we're looking for in e-commerce businesses is some angle of differentiation, I guess now. So if it's just a general e-commerce business that's going after like the same market as Noon or Soog or Amazon or whatever, it's not as interesting because that's going to take so much money and so much time until it becomes something that can compete with those two much bigger players. But there's opportunities within certain niches. So in the past, we invested in a company called Iowa, which is online glasses and contact lenses. And that's been a great niche. We've invested in a bunch of these sort of like very interesting market players, like Plant Shop, which is, online plants and things. So like there's a lot of opportunity within e-commerce. But again, like show me your ability to execute, to acquire customers and users, to grow a business that your understanding about that business is pretty valid. So that's the thing.
Yeah, that definitely makes sense. Tell me.
So the second one, I guess, was Shoaib is asking another question about, so B2b e-commerce. Yeah, I've seen a couple of B2b e-commerce plays. Again, just show me how you're different and how you're able to execute and dominate that market. And I don't really know that much about everything. I know a little bit about a lot of things, but like show me that you really know what you're doing and you're able to execute and grow and build that business. And that really is the differentiating factor more than anything else.
Absolutely, I agree. So the angle that I'm personally interested in is to understand the ecosystem from where you sit, from your perspective, the regional ecosystem. What do you think are the gaps in funding? Are there gaps in funding in the ecosystem across the region?
Yeah, I think there's definitely a lot of gaps in funding. I mean, as an overall ecosystem, the whole region was only about $1 billion in funding. That's like, I think I was talking to Philip at some point, that's about the same amount of funding that went into startups in Holland, which is not even a well-known ecosystem for funding. So like our whole region is so poor in terms of the actual funding that's going towards startups. It's ridiculous, honestly. Like the amount of money. Yeah, like $1 billion. Like there's a single project in real estate in whichever country you choose in the region that's worth more than $1 billion. Like it's a pretty big mismatch. So what we're seeing now is there's probably a bigger lack of funding at Series B and Series C. So growth stages, there isn't really that many investors in the region that are focused on that. A lot of the new funds that launched over the last year or two are focused at Series A. So there's more funding that's available there. I'm not going to say there's a lot of funding, but there's more funding that's there. Seed is still an area where there's not a lot of investors. There are a few, but again, across the board, we just need more funding in every stage that startups are at. Like it's just, we need 10 times the amount of funding that we currently have.
Wow. So then, because my follow-up question was going to be, what are the challenges that VC funds are facing or VC firms are facing? But I'm also curious, do you do follow-on? Do you do anything after seed if it's startups you've already invested in?
Yeah, so our thesis is we'll do about 100 to 120 investments at seed, and then we'll see how those companies perform, and the startups that outperform and do very well, we will be more than happy to follow on in them at the Series A or even at a bridge round or whatever it is. We'll probably invest in the top 20% of our portfolio as we see them perform and do well. And we'll probably do up to about $1 million in funding in the follow-on. So that's part of our thesis.
Okay. Awesome. And then the challenges for VCs, what do you think those are?
Challenges for VCs, I guess, is funding. Like there just isn't enough funding for VCs to be able to deploy into startups. The amount of institutional investors that exist in the MENA region are probably, you can count them on your fingers, right? There's not that many. And a lot of them have these sort of country-specific sort of weird asks and things which aren't really in the benefit of growing the overall ecosystem, right? You need, a rising tide lifts all boats, and you need the whole region to really be successful, not just a single country within that region. And so it's that. I think it's funding for VC funds is probably one of the biggest obstacles that we have as VCs. Institutional funding, family offices, corporates, it's not that common, then there's not that much available to it. Honestly, if I was raising a real estate fund, I can be like, that's the plot of land, I'll build a hotel on it, and people will be like, yeah, we understand, here's $1 billion. Like, but with a VC fund, it's like, you know what, we're going to invest in a lot of companies, and most of them are going to fail. Like, who's going to invest in that? But eventually, within 10 years, we'll give you a very good return, you know, 4 times or whatever on your investment. But like, it's complicated. We need a mindset shift, I guess.
Do you feel like you've been a part of that mindset shift, or that the culture is shifting? Like,
yeah, I mean, we've tried to help. We've helped 2 fund of funds programs from 2 different governments launch in the MENA region. You know, so trying to build that out, that sort of that area of expertise, and we've been trying to be very, very friendly to anyone who's trying to learn about the ecosystem or get access to deal flow or anything like that. We're usually pretty supportive in getting them started off the ground. And I think that for us, it's not a competition thing. Like, the more investors, the more people that are involved in the ecosystem, the better it is for all of us. And so, you know, we've helped a couple of VC funds get off the ground. We've given them access to our deals. We've co-invested with them. It's something that we have to do. If we really believe in this ecosystem, we have to build everything. Like, that's the thing.
Absolutely. And how was the process of raising funds for your own fund? How did that go?
It's still going. So still in the process. I think it's going well, alhamdulillah. I think we're getting there. It's just taking longer than we would have liked. I mean, COVID doesn't help. I can't travel. This is the longest I've been in one country in my entire life, I think. Like, not traveling since March. It's as a Bahraini, we're in a tiny little island. So every 3 months, we're like, we got to leave. We got to go somewhere. But
I absolutely get that. And we live in a country where right now, I mean, there's so many beautiful places to go, and I'm still dying to leave. So I can imagine.
If I was in Oman, I think I would be very happy, because like, you can go to so many places, Jabal Akhdar, like all the amazing places in Oman. Bahrain's this small, and Oman is much bigger. So.
No, I can imagine, absolutely. So I will ask you, speaking of COVID, how has investing changed in 2020?
All right. So I think at the beginning of 2020, a lot of funds were just getting off the ground. And so they're pretty active with deal flow. And then once COVID started to become more of reality in March, April, a lot of them were still in due diligence with a bunch of deals. So they continued with those and continued to invest. But what happened is new pipeline deals weren't making it onto the table for review. Most investors were being a bit more cautious in terms of what they're looking at and what they're not. And for me, a sort of a downturn is usually a great opportunity to invest, because you get best founders that are really motivated and really want to build something, who are passionate, and like a pandemic's not going to stop them. So what is going to stop them, right? So you invest with these guys, and that's sort of what, you know. It's a mindset of fear versus greed, right? That's the thing. And for me, it's like, if the whole world is fearful, then there's going to be some great opportunities there. And if everyone's greedy, then I'm like, I got to be a bit careful about what's going to happen. And so things did slow down. Like, it's undoubtable, and you can see the slowdown in most of the graphs. In sort of Q3, that's when most of the deals that were in the pipeline ended up happening, and then Q3 there was no new deals that were entering the pipeline.
Yeah.
I think a couple of good things happened as well, is that investors were paying a lot more attention to unit economics and seeing that this startup can actually make money at some point in time, because there was a bunch of startups in the last year or two that raised a lot of funding, but their unit economics were never positive. And so no matter what they did, they'd never be able to make money, because they'd spend $10 to make $8. And so the VCs are subsidizing the consumers, essentially. And so what happened is more VC started to pay more attention to these numbers, and I think that growth at all costs mentality shifted, and I think that's a good thing. I think some of the startups had reached sky high valuations based on this growth, but no one was paying attention to the real numbers, are probably gonna suffer a little bit, which is not entirely a bad thing. So yeah, I think that's. I hope that things are going to continue to improve. I think we're starting to see more of the VCs add more deals to their pipeline, but again, there is a slowdown in sort of seed funding, which is where we sort of operate. Hopefully, we'll be able to bring that back up within this year. So we'll see how that goes.
Absolutely. Have you invested in any startups yet, like since you started Plus VC, or no?
We're still working to get to first close for the fund. Once we do, we've got a big pipeline of deals to invest in. But yeah, you'll hopefully in the next month or two, you'll see some of our announcements.
Awesome. Someone, I think Awais was asking, can you share some startups that you've invested in and where they're at now?
So I did 180 investments. I don't want to pay
There's a lot.
preference to any of them. We've invested probably 30% of our first fund was in Egypt, 20% was in the UAE, like 15% was in Saudi, and then we honestly invested in almost every other country, Kuwait, Bahrain, Qatar, everywhere. So it's not like we're picky. If you go through Magnet's funding announcement, you'll just see 500 startups in, like I said, 20-25% of the deals that happened, and take your pick of which one you think is the most successful. I think we've had some really interesting stories.
Awesome. And Mohad is asking, how can people get in touch? So
we're pretty open. You can go to our website, plus.vc. Pretty nice. Okay, plus.vc.
Oh, yeah.
Easy to remember, and you can go and there's an apply now button, and you can just apply. And we promise that everyone who applies to our website, once we have funding, we'll review everyone and get back to them.
Cool. Very cool. I will go back to the question we were kind of talking about right before, which is the change in investing because of 2020. Do you see any changes happening in 2021? Or how do you see the next year, if you can? How do you see that going?
I don't know. I can make something up, but I don't know what's going to happen. Like, I didn't know what was going to happen in 2020. Honestly, like when the virus hit in 2020, we were like, oh, that's it. Like all of our companies that were affected, forget about the rest of the year. But honestly, most of them had a V-shaped recovery. Like the moment that the markets reopened, they were at higher levels than they were prior to shutdowns. And so I would not have predicted that. So I mean, it's easy to be a talking head and be like, this is what's going to happen in 2021. And I don't like doing that. Like I can make something up, but I can't see the future. If I did, I'd be much richer if I could see the future.
Fair enough. Just thought I'd ask just in case.
I mean, broader sense, I think people are going to go back to investing now that we have the vaccines rolling out across the GCC and most of the other markets. I think probably by Q1, Q2, we'll start to see a resumption of flights and activities and things in the region, and we'll start to see more deals happen. I think the overall trend that happened because of COVID, which is the digitization of consumers and people looking at apps and things for their day-to-day lives, I think that's going to continue, and it's just going to be a better opportunity for almost every investor in the market. So it's just that's what I think is going to happen. I mean, that's why I'm doing this fund, and that's why I'm going to be actively investing, is because I see things are going to be pretty great going forward. And investing during a downturn is the best time to be investing.
Absolutely. We have a really great question from Shadi. He's asking, what values in addition to funding should a startup look for from a VC investor?
So the honest answer is, usually it's just the funding.
Interesting.
Most VCs, it's honestly about can they fund you now, and will they be supporters in the future and stuff. But at the end of the day, look, when you're raising funding from a VC, it's a marriage you're getting into. So you need to be aligned short-term and long-term with the VC investor and with the partner that you're working with. You're going to be essentially reporting to and working with more closely. So that sort of cultural fit is pretty important. What we're working to do with Plus VC is add a lot more value in terms of stuff that you can benefit from. So, you know, there'll be perks and free stuff that you'll get. There's going to be a community, so our startups are going to be able to help each other out with questions wherever they have. And then the last one is we're working on content and programming for our startups so that they can learn at their pace whenever they need to learn something. There'll be some resource available to them. We're not going to spoon feed anyone, and we're not going to force anyone to do anything, but there'll be a lot of resources available, and it'll be up to each individual founder to decide if they benefit from that or not. So yeah, it's just about that sort of, you know, do you click and do you see value of working together? I think that's the thing. But the biggest thing is funding that any VC will bring to the table.
Absolutely. So we have questions from the audience that came in earlier before the event. So I'm going to go through some of those. And I think there's actually a question that I should have asked maybe early on. What is the process of VC investments? In case like someone doesn't know what it looks like.
So how do I start that? So look, it's essentially different stages of funding, right? You raise funding from a VC at a certain stage that's focused on that stage to get you to the next stage of milestones. They'll raise the next round of funding to get you to the next raise stage of milestones, and that's where the naming comes in: pre-seed, seed, Series A, Series B. So each of those are different stages in your company's development. I guess, you know, the core advice is you should raise from VCs only if you really think you're going to be able to scale and use that funding to grow much faster than you would under your own power, right? That's what you raise funding for. If you were going to grow 20% this year under your own power, but if you raise a little bit of money and you're able to grow 3 times in this year, that's really what you should be focusing on, and that's why you would raise funding from a VC fund. And what the process is essentially at the early stages, like seed and pre-seed. If you're raising less than $1 million, typically you'll be raising on convertible notes, safe notes or something like that, and you'll be raising amounts between maybe a couple $100,000 up to $1 million, nothing more than that, at different stages where you're just sort of getting started. And then, depending on your performance, you know, how well you're doing in terms of your revenues and things, you might raise a Series A, Series B, and through that way. And those are equity rounds typically, so you'll be directly selling the shares, whereas a convertible note is you'll be selling the shares at a later date. So it's just people use notes just so that it's cheaper and faster to do a deal rather than an equity round. So like doing a convertible note, you can download the safe document from Y Combinator. You can both agree on it and do a deal without even a lawyer involved. Although I don't recommend that. You should always have a lawyer involved. So it's pretty quick and cheap. If you were to do an equity round, it'll cost you maybe $30,000 to $50,000. It'll take you 6 months, and it's usually not worth it if you're raising less than $1 million. So
awesome.
It's a bit of advice, I guess.
Yeah, no, that makes sense. And then another question is on a similar topic, is asking about angel investors and what do they look for and what stage they typically invest in. So angel investors are the pre-seed, right?
Yeah, I mean, it depends. Like angel investors, you can't really group into one thing, right? Because it's an individual that invests in whatever he decides to invest in, right? Mm-hmm. And so some angels will invest at the idea stage. Some angels will invest after their products. Some angels will invest at seed. Some angels have enough funding to be able to invest at Series A. So like you don't really know until you're talking to the person. And angel investors they're individuals, so everyone is different. And typically it'll be something that is interesting to them, right? Are they investing in you? Do they like you? Do they think you're interesting? Mm-hmm. Do they have an affinity for the sector that you're in? Like if you're in finance, do they know a lot of finance things? Like that sort of stuff, really. And I can't really give you any like general advice about angel investors because honestly, every single one of them is different. Yeah, usually personal relationships play a big role in sort of raising from angels.
That makes sense. That makes sense. And then I guess just a side note, is Tenmo still operating?
Yeah, of course. Yeah,
Okay.
Tenmo's still around. So there's a new CEO, and they've been investing. They did, I think, 2 deals in 2020 or something. So like, yeah, it's still there. Whatever I build, I try to build to be sustainable for the long run without me there.
That makes a ton of sense. I'm going to go ahead with a few questions that we have, again, from the audience. If you guys watching want to send in questions, please go ahead and we'll work through them as we kind of go along. I saw something that just came in, but I'll get back to, okay, so actually Nitin has asked this question twice. I'm sorry I missed it, Nitin. How do you perform your turnover check with respect to a startup before investing? I'm assuming that's due diligence?
Yeah, turnover is, I guess you're talking about revenues and sales and stuff. Typically we'll ask the startup for that sort of stuff. And I mean, at the stage that we invest in, we can look, it's like they're making $2,000 or $5,000 or whatever, and it's coming in. It's pretty straightforward. There's nothing super complicated about due diligence at seed. It gets more complicated when you're talking at bigger numbers with sort of Series A and everything like that. But generally, there's probably 3 months of records for these startups. We can easily look at each of these 3 months of records, and that's pretty much it.
Okay, fair enough. And then you touched on this earlier. When should a about like if you want to scale? But do you have an answer to when should a startup go from bootstrapping or self-funding to VC funding?
Yeah, I think,
because I don't think VC funding is for everyone, right?
No, like that's what I said at the beginning, right? If you're looking to scale and grow ridiculously, and that VC funding will help you achieve that goal faster, then yes, that's why you should take VC funding. But if you're not after that, if you're building something more gradual that'll generate revenues and generate a profit and it'll be fine for you to live off, then that's great. Like, do that. Like, you don't have to raise VC funding. That's not the objective. The objective is to build a startup and a business that's doing well, right? So I wouldn't recommend VC funding for everyone. I don't think that everyone should go after VCs. The time to go after VCs is generally after you've launched a product, you have some customers, some revenues, and you can show how you've acquired those customers and revenues and how you'll be able to continue to build and scale on that front. So that's really the time that you would go after VCs. I would 100% not go and talk to any VCs before you even launched a product. I would probably not to talk to VCs until you have some customer usage. You can probably talk to incubators, accelerators, angel investors, and maybe there's some VCs that'll take that level of risk. But you have to be very aware of what the VC's mandate is before you approach them. So if you're idea stage and you go talk to a Series B VC, you're just burning a bridge there, and you probably shouldn't do that.
I saw something where you were talking about getting deal flow from countries outside of Plus VC's mandate or area. So yeah. Okay.
Yeah, don't do that. Like we got a lot of deals from India, and I'm very clear that we don't do anything in India, and like it's not in our mandate. So stop approaching us. But founders don't listen. So if you don't listen to me when I'm telling you don't apply, then how are you going to listen to me after we like it's not a great sign.
Fair enough. But you do invest in expats in the Middle East.
Yeah, of course.
Yeah.
It's basically any founders in the MENA region, no matter what their background is.
Okay. Because I have a question. How is it for expats who'd like to seek VC support in the Middle East? It's possible, right? It's
there's no issues there.
Yeah. Awesome. Great. And I do have a question, just because my own personal curiosity, because I know globally, female founders is a limited number. Like I don't remember the exact percentage, but a very small number of female founders get VC investing. Are there things that you're working on to encourage or to make it easier or to expand kind of your access, your diversity with the teams that you invest in?
Yeah, so with our first fund, about 25% of our fund had female founders in the sort of the founding team. I mean, that's much better than the global standards and 100 times better than what's happening in Silicon Valley, but it's still not great. Like, it's 50% of the population should be 50% of the fund, right? That's the number we need to get to. And I think for us, it's just about being approachable and being there. And we don't take a gender role or lens to anything that we do. And if a founder is female or male, and the female founders generally have been better than the male founders. So we actually have a bit of a bias towards female founding teams. I think there needs to be a bit more. I think what we're seeing from a lot of female founders is they need a bit more. They need to be a bit more assertive and a bit more aggressive, I guess. Well, we help with that. For us, it doesn't really matter, but we're sort of supporting however we can. Like, there's a bunch of female-focused sort of funds and accelerators and incubators and everything across the region. We provide our time. We look at those deals very closely. We try whatever we can do. I think for us, if there was more deal flow with female founders, then we would be doing more in our investment. So I think there's a gap at earlier stages that needs to be filled as well than just what we do. So for us, like, we actually really like investing in female founders because honestly, we found them to be really good teams and good investments to do. And the fact that they're underlooked by other VCs doesn't make sense to me, honestly. Like, it's a great deal. Like, it doesn't matter.
Well, I think it has to do with people's networks as well. I read something about that it depends. Like, people usually get deals through their network. So if your network is all men, then that probably is the majority of the deals you're getting. But
that's why we've been pretty active about, look, anyone can apply. Applications from online. You don't have to be networked to us. You don't have to be connected to us in order to get in front of us. And unlike some other VC funds where that's there on their side and they don't never look at it, we have made a commitment to look at every single deal and respond to every single deal that comes through our website. So that's there. And so that sort of network thing that prevents people from getting to us, we don't have that. And we're pretty approachable. Like, we're at most events, we're in social media, we're like, I think half of the region has my personal phone number. So like, it's not like we're not approachable. And that's important, I think, as a VC, to get access to different types of deals that aren't circulating within the normal VC networks and things.
Absolutely. And I would say, yes, you are definitely approachable because this event is happening and I reached out to you on LinkedIn. So yeah, easy to access, and I appreciate that. And I think it makes a difference, definitely.
Of course. I mean, we're here to support the ecosystem. Why should we be not talking to the ecosystem? That doesn't make any sense. Yeah.
Agreed, absolutely. And Nadia just sent in a few favorite books for women to read and gain confidence in the professional space. Confidence Code, Lean In, and Never Split the Difference. Thank you, Nadia. I will actually listen to those. Thank you. I appreciate that. And guys, send in any last minute questions. I personally feel like we're good to wrap up. So if you want to send in any last minute questions, now would be the time. And Hasan, if there's anything that you'd like to touch on as well, now would be the time.
No, I think I'm here if anyone needs to reach out. I've been, you go to our website, we have an application form, anyone, but please, like what I've said, which is about the right stage, be very aware of that when you're applying. And yeah.
Traction, some revenue, and within the MENA region.
Yep, that's pretty much it.
Awesome. I will ask you a few questions just kind of wrap up from my own perspective, point of view.
Sure.
What do you think would be next for you? And what do you see coming for Plus VC in the next year or so?
Next for me is, getting this fund off the ground and then starting to invest. We want to be a pretty active player in the region, and that's our vision and our mission. So for the moment we have that fund closed, you'll see a bunch of deals that'll take place. So for us, honestly, like we're at the same stage as most of you guys. We're fundraising for our fund, so that's our current objective and goal. Plus VC, the broader mandate that we're looking at is how do we be sort of the leading fund for seed and early stage sort of investments in MENA and like adjacent emerging markets. So at some point in time, we'll probably look at other funds that cover other geographies other than MENA, and really building Plus VC into something that lasts and is helpful and supports a lot of founders to get off the ground and get them to the next stage and next level. So we're building out a lot of things, and hopefully a lot of it will be useful to our founders, and we'll be able to help them and get them to the next stage and next round of their development. So our approach is really, how do we serve our founders rather than how do we take advantage of the founders and the startups that we have. So like with one of the deals that we're talking to, I basically was like, look, we're testing our stuff, and so anything advice you have for us on how we can be better, how we can improve, we're more than happy to take it. So
awesome.
Yeah,
that makes sense. I guess constantly learning and constantly growing.
Yeah,
that's good.
Yeah, that's pretty much it.
And then I just thought of another question in terms of working with different ecosystem organizations across the region. How, I'm sure as 500, you've already done that, but within Plus VC, where do you see ecosystem players supporting you, or you supporting them within the next year or so?
Yeah, I mean, we're here to work with everyone, and we want to work with everyone, and it really is in our mind a single ecosystem across the MENA region. It's not like pockets, and it's just basically we're open to building these relationships and building partnerships with whoever it is that we can help or they can help us. It's pretty straightforward.
Awesome, very cool, great.
Yeah.
I can see people saying they're asking for the recording. I will definitely be sending it out by next week, and I'll share it with you by this week, actually, and I'll share it with you, Hasan, as well. Thank you, Enos, for joining. I really appreciate it, and thank you, everyone, for all your engagement and your questions. I will say a few last things. First of all, you can follow us on @StartupGrind on Twitter and Instagram. I'll send out this recording as soon as possible, but probably by Tuesday would be the earliest. And then if you want to reach out to Hasan, you've heard it, go to plus.vc, or I'm assuming also on LinkedIn, you'll be reachable.
Anywhere, yeah.
Awesome. So thank you, Hasan, for being here. I really genuinely appreciate it. Just checking if there's any last questions. Okay, thank you, Shadi. Thank you, Turki. Thank you, Nadia. Thank you to everyone for being here. And thank you, Hasan, for being here. I genuinely really appreciate your time. And
thank you for having me, and good luck, everyone, in your journeys and your adventures that are coming up next.
Thank you, and good luck in closing your round. And I really look forward to hearing all the exciting news coming out of Plus VC.
Thank you so much. All right, take care. Bye, everyone.
Bye-bye.